difficult for them to enjoy the lifestyle that they desire and to build the financial assets they need. MyEcon's minimized tax strategy and the cash flow manager system empowers our members to minimize their taxes and increase their cash flow significantly. The math is obvious. If you save $3,000 to $5,000 on your taxes during your working career and invest the savings at a reasonable rate of return, you will amass a small fortune, well over $1 million. See, if you need $1 million, don't be thinking that $1 million is for somebody else. No, it is absolutely for you. Minimizing tax and income shifting is literally one of the most important financial strategies a person can implement into their financial life. MyEcon nor its associates are in the business of giving tax advice. So this is not tax advice. We're just showing you how the mechanics of taxes work based on IRS guidelines. We simply educate our associates on potential tax deductions, tax keeping guidelines, and how business taxes work. Knowing the potential deduction for your business and keeping quality records is the most important part for you to play in minimizing your taxes. See, I hear a lot of people say, well, I got to be a good tax person. They take care of my taxes. My accountant takes care of my taxes. That's not really true. That's like saying your dentist takes care of your teeth. If you don't brush your teeth every day, if you don't floss your teeth every day, when you get to the dentist, you probably won't have any teeth. You'll have some missing. See, you can't wait for the dentist to take care of it. No, you got to do something daily. Well, tax minimization is also something you do daily. You can hire a tax professional, provide tax advice, prepare your tax at the end of each business year, but without proper records, not even a tax professional can help you lower your taxes. Did you hear what I just said? See, there are hundreds of potential deductions, but after you understand how to record, how to do record keeping for a few kind of deductions, the rest will come easy. You do not need to be a tax expert, but you must learn what to deduct. So let's get into it, ladies and gentlemen. Commonly tax deductions and how they work. See, business expenses are the cost of carrying on a trade of business. These expenses are usually deductible if the business is operated with the intent to make a profit. So that's one key factor. You got to make a bona fide attempt to make money. You got to try. This is the IRS guidelines. You got to try. You ain't got to be that good at making money, but you have to make a bona fide attempt. And our system helps you do that. The second thing you got to do is you got to keep good records. To be deductible, a business expense must be connected with or pertaining to the trade of business and be both ordinary and necessary. An ordinary expense is one that is commonly accepted in the trade of business. A necessary expense is one that is helpful and appropriate to your trade of business. An expense does not have to be indispensable to be considered necessary. Now, business versus personal. Generally, you cannot deduct personal, living, or family expenses. However, if you have an expense for something that is used partially for business and partially for personal purposes, divide the total cost between the business and personal parts. You can deduct the business expense only as a business part that meets the general business deduction rules and all these things here. So now I want you to think about this. Now you might be saying, well, John, where do you get all this information from? This document is in your back office. It is, if you go down to the document center and you click on documents, and once you get there, there is training and support materials. This is the common tax deductions package. You just click on that and download this PDF. Some of it I kind of extrapolated and put it here. Others of it I just kind of left because it would have been too much to go through all. We don't have time to get through all of it. But you want to read that document in its entirety. Okay? Now, I pulled out some pieces here. Let's talk about some of the deductions that are going to help you get a deduction for in MyEcon. Your transportation, driving your car. Travel. Every time you travel could potentially become a business trip. Your meals. You go out to eat all the time. So that could be a business meal. The interest, whether it's interest in a car note or interest on a credit card, could be deductible if that is business related. And you determine what's business related by, for example, if you look at your car, some people say, well, I don't do a lot of business, so I don't get a lot of write-off. Well, you choose what you do, when and where you do business in your car. If you do certain things, and we're going to talk about them, but if you do certain things, guess what? You can write off your mileage. And it could be 50, 60, 70, 80% of the mileage of your vehicle. Home office expenses, gifts, depreciation, insurance. Okay? So let's get down to it. Let's start here with car expenses. This chapter discusses what you can deduct for business transportation when you aren't traveling away from home as defined in chapter 1. These expenses include the cost of transportation by air, rail, bus, taxi, etc., and the cost of driving and maintaining your car. Whose car? Your car. So this information is from publication 463 from the IRS. Okay. So I don't want you to be saying, well, my econ said this. I don't want you to be saying, well, John said this. No. The IRS says this is directly from the IRS. And they said, if you travel by air, rail, bus, taxi, or even using your car, it could be deductible if you use it for business. Transportation expenses include the ordinary necessary cost of all of the following. Getting from one workplace to another in the course of your business or profession when you are traveling within the city or general area that is your tax home, as defined in chapter 1. Visiting clients and customers. Going to a business meeting away from your regular workplace. Getting from your home to a temporary workplace. When you have one or more regular places of work. Now, this one is key. Fourth bullet point. If you leave your home, for example, a lot of times we stop off and we get gas, we stop off and we get coffee, stuff like that, right? Well, from there, for example, to the coffee shop could be commuting miles. You don't write those off. But if you got to that coffee shop and you got you some coffee and you had you some business cards, you take your business card out, give it to somebody in line, just say, hey, my name is Bill. I'm a business owner in town. I just want to give you one of my business cards. Is that okay? Yes. And they might ask you, well, what exactly do you do? Well, I help people grow their cash flow. I help them lower their taxes, improve their credit, build passive income. If that's something you might be interested in, I can see some free information. Or whether that person does business with you or not, guess what you have done? You have turned that area into a temporary work location. Now, when you leave there and then drive the rest of the way to your job, that is now deductible miles for business miles. Okay, you hear me? And now, look at this. A lot of times we have lunch at work. You sit there in the cafeteria or you go out to a little restaurant or whatever you do. You sit there with one of your coworkers. I would also just take out a business card and say, hey, I did want to give you one of my cards. If you know anybody that might want to lower their taxes, improve their credit, learn about investing, maybe build passive income, can you pass my card along to them? We're asking for referrals. Now you're continuing to do business partnership. Now you just go ahead and eat your lunch like normal. Well, now whatever you pay for that lunch is now a deductible meal for a business meal. Now when you leave and get ready to go home, see, I'm showing you how to get this. This is a pro tip for how to get the deduction started right on the majority of your miles. You drive home, and then you get very close to home, stop off, give out another card. So the first time you gave out a card was about a minute or two. The second time you gave out a card was about a minute or two. Third time was about 2 minutes. So it took about 6 minutes to get this deduction. Now you're close to your house. So from that temporary work location first, all the way around throughout the day, all the way to the temporary work location at the end, all of that is business miles, ladies and gentlemen. Now you start writing off 70, 80% of your miles that you're driving your car. Now you look up, you got, 10,000, 15,000, 20,000 miles for deduction. We'll talk about how it works. And then, of course, from that temporary work location back to your house, at the end of the day, that's commuting miles. You can't write that off. But now you look up, this will be a huge deduction for you. Now you got to have it in writing. We have a cash flow manager to help you do that. We'll talk about that in a minute. But this could be huge for you. This could save you $2,000, $3,000, $4,000 a year. Just driving the car you're gonna drive anyway. Now, you got two things. You can do actual car expenses, or you can use what is called the standard mileage rate. There's two ways that you can get this deduction. You may qualify to use both methods, but you may want to figure your deduction both ways to see what gives you the bigger deduction. So here's what you want to do. Even if you think you're going to take actual car expenses. Now keep this in mind. If you start off with actual car expenses, you got to stay at actual car expenses forever when you first start doing it. But if you start off with mileage, you can switch back and forth depending on which one gives you a bigger deduction. But here's what I tell people. If you got a car that maybe is not so new, it's kind of decent, right? And you drive a lot, mileage might be the best option for you in a lot of cases. But maybe you got a little bit more expensive car or a new car, and you don't drive it very much. Expenses may be better for you because you can get the depreciation and all that stuff, and we'll talk about what the different categories are, things that you can write off. But it'll probably end up being much more than mileage because you don't drive very much. But it's still the same percentage of all these other things. Okay, so it could be better. So you just got to figure out which one. But either way, you keep your mileage both ways because even if you take the actual car expense method, you still got to figure out what percentage of your miles or business to figure out what percentage of your actual expenses are going to be deductible. So if you use your car for 80% business, for example, you'll be writing off 80% of the car insurance, maybe 80% of the gas that you put in the car, maybe 80% of the car washes and things of that nature, okay? So keep that in mind. So for 2023, the standard mileage rate is 65.5 cents, 65.5 cents. Now you might be saying, well, not it's 2024. Why are you talking about 2023? Well, remember, this year, 2024, you're filing taxes this year, but it's for the previous year. Okay, so you're filing 2023 taxes right now. So in 2025, you'll be filing taxes for 2024. So the IRS always has this stuff, basically, it seems like 1 year behind, but you're really up to date. As they put the stuff out here, then of course we update our records, okay? If you choose the standard mileage rate for a year, you can't deduct the actual car expenses for that year. You can't deduct depreciation, lease payments, maintenance, repairs, gasoline, stuff of that nature, okay? So you're doing one or the other. Now, if you're somebody that's kind of nervous and you don't feel you don't know if you're gonna write all your deductions down and be very diligent, mileage might be better for you. It's an easier way to track everything, okay? Now, let's get to the actual car expenses. What type of things are we talking about? The depreciation, that's the value of the car, okay? Licenses, the gas that you put in it, the oil, you get an oil change. Well, not if. You should get an oil change. If you don't get an oil change, you already know what happens there. Any tolls that you pay, your lease payment, and your insurance, your garage rent, parking fees, registration fees, tire repair fees. These are some examples. So, like I said, figure out which is which for you. Business and personal use. If you use your car for personal purposes, you must divide your expenses between business and personal use. You can divide your expense based on the miles driven for your purpose. So that's how I was telling you. Based on, because even if you're doing actual car expenses, you still keep track of the miles because you have to know what percentage is business and what percentage is personal. Okay? But this is a very, very easy way for somebody to transition. They have a job, they're working full time, they started the Mighty Kind business, they became an affiliate, you're an affiliate with us now. Now you qualify for a deduction that you could not get as an employee. See, it makes sense for you to keep your membership long term because you would lose your tax deductions if you don't. Sometimes I see people, they think, well, I think I'm getting out of my income. Those people don't understand how my income works. You lose money when you get out of my income. You're saving more on taxes than it costs you at a program. Anybody that don't understand that, those are people that kind of quit. But if you understand that you save $2, $3, $4, $5,000 a year by just being involved in the membership and following a financial strategy, it's putting lots of money in your pocket. We'll talk about how big that can be. Now, interest. Now, see, a lot of times people say, well, the employees are great. Well, I think the employees are good, but the business owner is better. I'm going to prove something to you. But we're looking at America, capitalism. This is the capitalistic system that we live in, ladies and gentlemen. I want to show you something. If you're an employee, you cannot deduct any interest paid on your car loan. Now, this is from the IRS. It's not from John. This applies even if you use your car 100% for business as an employee. However, if you are self-employed, and you use your car in your business, you can deduct that part of the interest expense the business use of your car. For example, if you use your car for 60% business, you can deduct 60% of the interest on Schedule C. So think about this, ladies and gentlemen. Both people are using the car to try to make money. Both people are trying to make a living. You drive down to your job, the government gives you no tax relief. John drives down the street to try to go get him a customer. They allow John to write off his mileage on his tax. You know why they do that? Because the business owner creates the goods and services for the people to buy that have the job. The business owner gets tax preferential treatment in America. You should never, ever, ever get rid of your mining kind of affiliate business, your home-based business. It puts you in a superior tax position. Okay? Parking fees and tolls, in addition to use the standard mileage rate, you can deduct business-related parking fees and tolls. So that's in addition to the mileage rate. You put your parking fees and stuff on the tolls. Well, that can add up depending on where you live. Ladies and gentlemen, this is thousands of dollars in savings over time. Thousands of dollars. Okay. Let's continue. Let's talk a little bit about your travel. See, we go to family reunion. We go to all these different things, funerals. Typically, those things would not be deductible things. But I'm going to give you a couple of pro tips here to start turning regular travel into business travel. And remember, we have a travel membership. And if you have not upgraded to the travel membership, I say, hey, if you go travel once or twice a year, you need that thing. Because number one, you're going to save up to 70% off when you travel on your accommodation. I don't see why you want to pay full price. That's number one. Number two, since because basically we're in the travel membership business, we sell travel membership. That's a part of your business. So let's say you go down to Cancun. You already have planned on going to Cancun anyway, but you go to Cancun and you book it on our deal. You can send an email over to the hotel you're staying and say, hey, I would like to, while I'm there, talk a little bit with one of your managers or somebody who can help me out. I would like to kind of go over some of the amenities with you guys because I sell travel memberships and your property is listed on one as a locale for our membership destination. And I would like to tell people about if they use the membership, they can go here. Well, they got a reason to talk to you, don't they? Now, that conversation with them maybe 10, 15, 20 minutes of your whole stay. But because you sent that email prior, you have what is called a clear business intent for this travel. So even though you're going to get there and have fun with your family and do all the things that you're going to do, guess what? This is now a business trip. The airfare is now deductible. The hotel is now deductible. The meals are now deductible. Let's say you're going to $1,000. That's a $3,000 deduction for traveling. Did you see what I said? Did you hear what I said? Did you see what just happened there? So we've already talked about how you just drive in your car anyway. As an employee, you can't write it off. But now that you're an affiliate with My Income, now you get deductions that you couldn't get as an employee. Now you can start getting $1,000 in deductions. We'll talk about exactly how much that's going to be. So I'll give you an example. Now we're talking about the travel that you're doing. You're spending $3,000 to $5,000 a year on travel. Why not write that off? For tax purposes, travel expenses are the ordinary necessary expense of traveling away from home. So you would have to go to that locale to see how the amenities are. Didn't you? See, you have to go. You can't do that from your house. It says it also discusses the standard meal allowance, rules for travel inside and outside the state. So it could be inside the United States, or it could be outside the United States. And then they got some here, luxury water travel. What's that? That's a cruise. So wait a minute, I can cruise and get a tax deduction? Yes, IRS is telling you this is from the IRS. Now, transportation. See, let's talk about travel expenses again. If you have expenses for transportation, then you can deduct the cost of travel by airplane, train, bus, car. You can call that rental car. You can call that Uber. You can call that Lyft. Between your home and your business destination. If you're provided with a free ticket or you're riding free as a result of frequent flyer or similar amount, your cost is zero. If you travel by ship, okay, luxury water travel, cruises, you can venture all that. There's a cruiser limit to that. But if you're paying nothing, then of course it's not a deduction. But if something, there's an expense to it, you pay, then you write it off on your tax. Taxi, commuter bus, airport limousine. Limousine? Paying for your baggage. See, when you pay for your bags on the airplane, that is a deductible expense. If you ship something, of course. If you're operating your car, right here's this car, operating and maintaining your car and traveling for business, that's a deductible deal too. Standard mileage rate. If you rent a car while away from home on business, obviously I already said that, you deduct the business use portion of the expense. Lodging and meals, that's the hotel. Cleaning, that's your dry cleaning and laundry. Telephone, probably don't use the telephone in the room. I would say this was probably nothing because I don't use that phone. Don't charge me for that. I use my own cell phone. If you tip, that's a part of writing off. See, think about this, guys. This could end up being $3, $4, $5, $10,000 a year in deductions. Now, here's a rule of thumb. Every $10,000 in deductions will probably save you at least 25%, which is $2,500 in real cash. So by having the MightyCon affiliate membership, you're probably going to have somewhere between $10,000 and $30,000 in deductions off things that you're already doing anyway. It puts lots and lots of money. Let's talk about the meals. You can no longer take deductions for meals related activities generally considered to provide entertainment, amusement, or recreation. You can continue to deduct 50% of the cost of business meals. So this goes back to that example I gave you for going to work. That would be a business meal. Here's a tip: never eat alone. Always go with somebody. Go with your girlfriends or your best friends and all this kind of stuff, or your coworkers. So you can kind of talk a little business for about 30 seconds to a minute or two. Ask them to send you some referrals. Even if they told you no in my econ, you say, hey, I know this ain't for you, but hey, I still want to give you 1 or 2 more cards here. So if you got anybody that you know that might want to pay less tax, I know you like paying a whole bunch, but if you know anybody that want to cut their tax like $200, $300, $400 a month, can you please pass my card along to them? I would love to be able to help them out. You're asking, you're soliciting for new business. Okay? If food or beverage are provided during an entertainment event, the food and beverages that were purchased separately from the entertainment, or the cost of the food or beverages are stated separately from the cost of the entertainment and one or more bills, invoices, or receipts, you may be able to deduct separately stated cost as a meal expense. So if you go to the ball game and the tickets are $500, well, that's entertainment. You can't write that off. But if you get there, you buy you a couple of beers and some hot dogs and all this little stuff that we do, and that comes to $45. Well, the $45 is 50% deductible. That's what this is telling you. You drove your car there. Guess what? That's deductible. That's business related costs. Because while you're there and you're eating a hot dog and drinking your beer, you tell your friend, look, you could have been able to write this off on your taxes, this bill here if you're a business owner. I help people do this. I teach you how to do it. Here's my card again. Go to my website. You can get you signed up. When you're doing some business, you're talking to them about, you're counseling them about business deductions and how your business works. Guess what? Deductible. Let's talk about paying your children. See, we all got children, most of us, right? And these kids cost us money. I got a question. Do they cost you money or do they make you money? Well, typically they cost us money. But you can write off, I would say even up to the standard deduction, about $14,400 so odd dollars. And your deduction, when you got 3 kids, that's almost $45,000 in deductions for feeding them, clothing, taking care of. You're going to do it anyway. Let's take a look at it. You can generally deduct on the Schedule C. That's what you have if you file a business. If you have a business, that's attached to your 1040. On the Schedule C, the pay that you give your employees for the service they perform for your business. Now, they got to do something in your business. We'll talk about how it works real quick. The pay may be in cash, property, or services. To be deductible, your employees must be an ordinary necessary expense, and you must pay or incur it in the tax year. In addition, the pay must meet both the following requirements. It must be reasonable. So you can't pay a kid $10,000 a month for, doing your cat go back, for example. That's not what people that do data entry, they don't make $10,000 a month, so that'll be unreasonable. But if it was $15 an hour or something like that, $20 an hour, that's reasonable. For services that they perform. Now, even if you got young children, we're going to talk about how this works. You cannot deduct your own salary or any personal withdrawals you make from your business as a sole proprietor. You are not an employee of the business. Let's talk about it. Oh. Go back here. Go back one more. Kinds of pay. See, what can the pay be? It could be awards. It could be bonuses. It could be education expenses. Okay, if you're paying tuition over at the school for your kid, private school, it can be written off as a fringe benefit, basically. Loans or advances, property that you transfer. A lot of us, we have children that start to get older, and you give one of your cars, you transfer your car to them. That's a deduction. That's property. Reimbursements. If they get older and you start paying for college, instead of taking, here's a pro tip, instead of taking the cash and just paying it directly to the school, that's not how you do it. What you do is you take the cash and pay it to the child. And then you 1099. Let's say it costs them $25,000 a year to go to school. You pay it for it. You 1099 them the $10,000. I mean $25,000. You tell them to take the $25,000 and take it over to the school and pay it. Now, what are they doing for you? They on campus. They need to be getting identity theft customers. They are customer service liaison. So you give them some cars and for your website. And they can market these products. They can market the traffic, no problem. They're an independent contractor for you. That's why you pay them. They're your marketing on the campus. Now you've done that with 100% tax deductible money to pay for the school because you gave it to them and they pay the school. And since they are now a 1099 sole proprietor for you, guess what? They qualify for tax advantages. So they're not going to pay very much tax on the money either. So you can have a tax-free college education. Did you hear what I said? See, this is what wealthy people do. Reimbursements for employee business expense, sick pay, vacation pay. You pay for them to come home from school. You buy them a plane ticket. That's the vacation pay. That's part of the pay. So these are benefits. Now, the first $14,000 or so odd dollars for anybody is federally tax exempt. So they're not going to pay federal tax on the first $14,000. If you got young children, get you a little card, little postcard, put a picture of you and your family, say, hey, send your kids to Disney World. Let's say you got let's say you got a little baby. Take a picture of all y'all, put it on there. Let's say send your kids to Disney World, save up to 70% off. Put your website on there. Now the kid is a part of your marketing campaign. And then all the things that you pay for to take care of the child and all the things that we do and all that is now deductible. Having an Xbox is a fringe benefit. Having cheerleading camp is a fringe benefit. So you pay. Now you start looking up $5,000, $10,000 a year as a tax deduction. For one, that this is a person doing something for you in business. kids get a little older, they're 10 and 12 and 13 years old. Empty the garbage at home in your office. Help you put your stuff in the cash flow manager. That's their duty. That's what you're paying them for. See, allowances are not deductible. Meals and lodging. See, having food in the refrigerator. That's a fringe benefit. So part of your grocery bill could be on that. Place to stay, a roof over their head. Now, meals and lodging. Here's the use of your car. You take them back and forth to school. Hey, that's a part of that's basically your transportation services. See, do you understand? You can start writing off $5,000, $6,000, $7,000 flights on the airplane. Now they gotta go. Okay, y'all going on family vacation, but you gotta buy them a ticket because they ain't got no money. That's a fringe benefit. See, are you understanding? Cafeteria plan. That's basically lunch money. Dependent care assistance. That could be daycare. Look, I'll tell you something. I wrote off thousands and thousands of dollars when I was raising my young daughter. Got a huge up to $6,000 on tax. I learned this 20 years ago, y'all. You better not get out of my income. That would be an unwise decision. Back here, family employees. Let's talk about it. What does the IRS say about your young child? Child employed by parents paying for the service of a child who is under the age of 18 or works for his or her parent in the trade or business are not subject to Social Security and Medicare taxes. If the trade business is a sole proprietorship or a partnership. So when you join my econ, you're an affiliate. Guess what you are? You're a sole proprietor. So that means you don't got to worry about not federal, but FICA and Social Security tax, Medicare, all that kind of stuff. All you have to worry about is the federal part. But remember, the first $14,000 or so is federally tax exempt. If these payments are for work other than in the trade of business, such as domestic work in the parents' private homes, or even if they don't work in the business, if they do stuff around the house, do you have your kids take out the garbage? Do you have your kids clean their rooms? Do you have your kids empty the dishwasher? Do you have your kids sweep the floor? Guess what? Most people pay an allowance for that and it's not deductible. But if it's in a business, it is now deductible. And they don't have to worry about anything on that until they're 21. Social Security better get that. See, I want you to understand something. These the ones that I'm covering are huge. The mileage is huge. The travel is huge. The paying your child is huge. You got 2 kids, that's almost $30,000 in deductions. Up to that they wouldn't pay no tax on, you won't pay that either. And people say, well, how do I get this deduction? Well, here's what you do. You open a bank account with you and the child's name on it. The young children, it's a custodial account. And then every month you write them a check for $500. And then you like, hey, well, John, $500, I don't have any extra money. It doesn't cost you anything to get this deduction, folks. See, right up, right? Check contract labor in the memo. Write the check to the check deposit. And then when the money clears, now you start pulling the money out every time child needs something. You start pulling money out every time you need something for the house. And that's a part of child benefits. You go to the grocery store with that money. You pay you go school shopping and clothes shopping and all that. We do all that stuff. So you pay them $500 and you charge them $500 to live with you. It's a net zero. But now you got a paper trail saying you pay the child. You got a business called My Econ that shows that you got a business. If you ever audit it, you show those 2 things, you're good to go. This is huge. Let's keep. They make it more difficult trying to hire you. Let's say China, they got business. They hire you. Well, it's for the service of a parent in the daughter's business. Our subject to income tax withholding and so that. So the IRS makes it easier for you to do this on your child than it is for your child to do it for you. So that would mean the IRS actually wants you to do this. The reason why people don't do it is because nobody ever told them how to do it. The IRS position is, hey, we put it out on the website and they read it. So you got to understand this. You can save tens of thousands of dollars. I've saved hundreds of thousands of dollars because of all this stuff we're talking about. Let's talk about business use of your home. Now, if you are making a tax profit, so for example, if you made $10,000 but you wrote off $20,000, that's tax loss because you have a negative $10,000 deal. But if you made $10,000 and your deductions were $8,000, that would mean you have a $2,000 profit. You have a tax profit. But when you have a tax profit, you can take business use of your home as a consideration as well. So that could be things like your water bill, your electricity bill, that kind of stuff, your property taxes, the upkeep of the home, the mortgage, all that kind of stuff. So all these things that the upkeep of the home can now become deductible. But here's what you got to understand: the qualifying claim expenses for business use of your home, you must meet the following tests. It must be exclusive. Like I have an exclusive office in my house. I have an office. One room is a total office for me. So that's the X amount of square footage of the home. So now that's a percentage. All right. Okay. You might have an exclusive area in your basement. You finish it off. That could be a training area. You might go down there every now and again and do stuff, but it's a training area. You got a big 75-inch television down there. You know, we do Super Saturdays. You go down there and watch Super Saturday on the big screen. It's a training area. It's part of the percentage. It's got to be regular. You got to use for business. Let's talk about record keeping. How easy is it to prove all this stuff? If you deduct travel, gift, transportation expenses, you must be able to prove or substantiate those certain elements of the expense. This chapter discusses the record that you need to keep to prove these expenses. So I need expenses. You should keep an adequate record to prove your expenses or have sufficient evidence that will support your own statement. You must generally prepare a written record for it to be considered adequate. This is because written evidence is more reliable than oral evidence alone. However, if you prepare a record on a computer, it is considered an adequate record. That goes to the cash flow manager, ladies and gentlemen. So you got a cash flow manager app that comes with your business. So when you incur an expense, you open up the cash flow manager, you put the information in, you take a picture of the receipt. That is documentary evidence. So what are adequate records? You should keep proof that you need an account book, diary, log, statement of expense, trip sheets, or similar record. You should also keep documentary evidence that together with your record will support each element of an expense. Documentary evidence. You must generally have documentary evidence such as receipts, canceled checks, or bills to support your expense. So when you put the information in the cash flow manager, it's written. Then when you take a picture of the receipt, now you got a copy of the receipt as well. Then you got a double duty, right? Exception. They got a but here. What's the exception? Documentary evidence isn't needed if any of the following conditions apply. You have meals or lodging expense while traveling away from home in which you account to your employer on the account of the plan. That's not reimbursed. You can't write that. But 2, your expense other than lodging is less than $75. So if it's less than $75, you don't even need a receipt unless it's for a hotel room. So if you go to Red Lobster, the bill is $68. You don't even need a receipt, just put it in the cash flow manager. The IRS says that is sufficient. See, they make it easy. You don't got to tell lies on your taxes. They make it simple. But now, if you have a hotel room that's $65, well, because it's lodging, you have to have a receipt for that. If it's over $75, if you take your family out to eat and you do a little bit of business, well, then the bill is $195. Well, because it's over $75, you do need a receipt. But most times, it's going to be $175. I'm going to tell you, folks, this is huge. Timely records. You want to do it at the time the expenses incurred. But if the IRS ever asks you, and when it's done, you don't be talking about, oh, I do that at the end of the month. No, that's not timely records. It's not timely. Okay? So more deductions. Your money got fee of $39.95. That's the deductible deal. Banking fees, tax preparation fees. You get taxes done by somebody, well, it's what you can write it off. Any supply. This is education seminars, going to we go to a Super Saturday Live, we go to a conference, that's deductible. Retirement investment, we should have opened up a SEP IRA, a simple IRA, or a regular IRA. That's a deductible deal. SEP IRA is a person in business, kind of works like a 401k. Phone service, internet access, printing, webinar, I got a Zoom fee, I pay for Zoom. Got a mailbox, legal fees, advertising. Well, hey guys, those are all examples. Let me give you some examples here, real quick. On the left side, this is a person who got a part-time job and a full-time job. This is what most people do. They make 70 grand over here on a W-2, and they get a part-time job, make $5,000 a year. And this is married by the joint, $25,900. So that's what standard deduction. We'll take that off of there. Now the taxable income is what's left after we take the standard deduction. Okay. So we got $49,100 here. For the tax overall, this is $68.74. We got the W-4 filled out incorrectly. Most people, 80%, got it filled out incorrectly. So they sent $9,000 over the IRS, and we get a refund of $2,122. And then the person said, "Woo, I had a good tax person. They got me a good refund." No, it had nothing to do with the tax person. And everything to do with you gave them $9,000 instead of $68.74. But now let's take it to another level. Let's get a business over here. I'm about to take it somewhere. So we still got the same W-2, $70,000 on the job, but now we got a business and $5,000 as opposed to getting a part-time job. But we still get the same standard deduction. But also on top of that, we got business expenses. Remember what we've been talking about the whole time. We got $20,000 loss on the Schedule C, but we didn't lose any money. You was going to drive the car anyway. You was going to do all these things you're going to do anyway, so it's not a loss. So now you got the standard deduction taken off and the $20,000 from the Schedule C taken off. Now the taxable income is $29,100. Is tax on $29,100 less than $29,100? Yes. Tax over is $32.89. Now we still have the W-4 filled out incorrectly. We sent them $9,000 over there, so now we get a refund of $5,711. That's how this works. Let's get an example here. Let's take some mileage. 15,000 miles for the year, 80% is business miles. That's 12,000 miles. You get 65.5 cents. That's a $7,800 deduction for just driving your car. Hey, that's huge. Remember, I said these are going to be the huge ones. Your communication, that's your cell phone, that's your internet, that's $2,000. Let's do a little travel in there, $4,000. Paying your children, 2 kids, we got $10,000 total. That's $23,000 in deductions. How much does that? That's some huge savings. So this is easily how you can see how you can have over $20,000 on the Schedule C. He's already driving the car, he's already paying the cell phone bill, he's already traveling, he already had the kids. And let's go back. Because he can go right here, all this is the same, but right there, you could do a W-4 adjustment on this 5711, couldn't you? So if you're in the membership and you go look at the W-4 section on that tab under your carousel, you need to change your W-4. Because you don't want to wait till the end of the year to get this $5,700. I wouldn't. I want my money now. I need my cash today. So we do a corrected W-4 based on this scenario. We got an extra $476 a month back into our paycheck on the job. See, it's getting bigger, isn't it? It's getting bigger. Now let's take a look. Let's invest it. Take that $476 and put it into your 401k. In 5 years, you got $38,000. See, my econ is not a $38, $39 decision. It's a several $1,000 decision. Let's do it for 10 years. You got $109,000. if you didn't do this, the $109,000 would be somewhere else. Let's do it again. Let's do it for 20 years of your life. That's $470,000. You cannot afford to not income shift. You cannot afford to keep giving all the tax money away. This is why you got MyEcon. This is why you got the financial membership. Let's do some elimination. Let's take the $476. Remember, our cash flow strategy takes all the way to the right. Financial membership builds your financial plan. It'll also build you a debt elimination plan. You put all your debts in order to which one to pay off first. So we adjusted the W-4. We got the $476 back to our paycheck. And it told us to take it and add it to this furniture payment. So we had the $250 minimum payment plus $476. In 6 months, the $4,000 was wiped out. The $14,000 car is paid out in 13 months. The $4,000 and the $3,500 MasterCard here, Visa, paid off in a total of 7 months. The $25,000 Honda is paid off in 15 months. The $45,000 student loans paid off in 20 months. The $275,000 mortgage is paid off in 65 months. That's a little over 5 years. Do you understand you got 100% debt free for some of the government's money? This is why you need the MyEcon system. This is why you change your life. Now people say, well, do they want me to do this? I'm scared, John. I want to mess with the IRS. I want to show you something. Remember, business owners get tax preferential treatment in America. 27 giant profitable companies that pay no taxes. This was in USA Today. This is not MyEcon today. It's USA Today. Let's take a look at some of them. Look at this. GM, they sell cars. American Airlines, United Airlines, they made billions of dollars. Hundreds of millions of dollars. They pay no tax. Why are you paying some on $50,000? Why are you paying some on $60,000? Why are you paying some on $80,000? See, it must be something you don't understand. And some of us think that a certain president getting ready to get fit. No, these laws Congress put in place, and they've been in place with Democrat Congress, with Republican Congress, Democrat president, and Republican presidents. It still works the same way. Let's take a look some more. 55 corporations pay zero tax. This is in 2020. At least 55 of the largest corporations in America pay no tax, no federal tax. Oh, well, what companies are that? Let's take a look at a few of them. Charter Communication, that's your cable company, right? Dish Network, DTE Energy, that's your energy company. Duke Energy, okay? FedEx. They ship in packages. They ain't pay no tax. But here you go paying something. You better learn something. As they say, you gonna learn today. You learn today. Take a look at some more. Michaels, they ain't paying no taxes. Nike, they selling all them Jordans. They ain't paying no taxes. Why are you paying something? See, it'd be different if everybody just paid the same thing. It'd be different. I wouldn't have nothing to say. But those who know more pay less. Those who make their money differently pay less. The people that just make all their income from a job, they pay the most taxes in this country. The people that own businesses and grow from investments pay very little tax. So it's less to do with, because a lot of people say, well, wealthy people don't pay taxes. Well, you got to ask yourself, how did they become wealthy? They didn't become wealthy on a job. It's because of the way they pay money. They make their money. And because they make their money from different types of sources, their taxes are lower. They have other mechanisms to lower taxes that the employee does not have. This is why you need the MyEcon affiliate system. Now, we keep track of this with the cash flow management. You can go into the tab in the carousel. You can click on it and watch the videos, but boom, download the cash flow manager, create a cash flow manager here, okay? Bam, you got something here, you create one, create a new one, all right? Put your business name in there. If it's you, MyEcon, whatever you want to call it. Now, we want to enter new expense. Bam, we click this right here, enter new expense. Now, the who, the what, the where, the drop down menu has got all that there. You can assign a receipt, take a picture. It's real simple. This is all you need for the IRS, and you're good to go. Assign in. Boom, we got a cell phone bill in here, we put it in here. We can put a recurrence on here. We can repeat this transaction, so we don't have to do it every month. We just go and and just approve it, confirm it. If it's off by a couple of dollars every month, then you just change a few little dollars in there. Make it easier for you to keep records. Real easy, real simple. Say the entry. Hey, you good to go. You want to view the expenses? You can take a look at everything like that. You got the GPS. You want to keep track of your miles. Remember, we're talking about transportation. This is how you do it. You can log your mileage manually, or you can use your GPS function from your phone. You get started here, start a GPS track, click the button, boom. Constant record keeping saves you money. So I hope you learned something today. By you having a My Account affiliate system, it puts you in a position to have a tax shield and helps you pay less taxes on your job. That's what you want to take away. And even if you don't have a job, you're going to pay less tax on the income that you make in My Econ as well. So all around, it's a win-win situation. You got the main deductions, the travel, the paying your children, the transportation. Those are three big ones. Typically, between them three, you got $10,000 to $15,000 in deductions. The worst thing that can happen to you in My Econ, you're going to save $2,000 to $3,000 a year on your tax. Take that and use it for debt elimination. Take that and use it for investment. Or even if you just want to put it in your lifestyle and just have more fun, do whatever you want to do. But at the end of the day, it's all about strategies. See, people say, well, if I just made more money, I'll be okay. Not necessarily true. Yes, you got to make more money, but you also got to keep more of that money. I think that's most important. See, Mike Tyson made $400 million in his career, and he filed bankruptcy. So it's not just make more money. You got to make more money, but you got to keep more money. You got to control how much goes to tax. You got to control how much goes to expenses. You got to control how much goes to debt. You got to control how much goes to investment. And then, and only then, you will have money. So I hope you learned something today about your membership. So here's what I'm going to do. I'm going to pause the recording. And I'm going to allow